For more on the currency trade, let's bring in our next guest. He's Brian Dolan. Brian is the chief currency strategist at Gain Capital Group. He also wrote Currency Trading for Dummies. He joins us live from Bedminster, New Jersey on this Tuesday. So, Brian, let's talk first of all about the dollar. We've seen a nice bounce here from those November lows. What happens next for the U.S. greenback?
Good afternoon, Carol. I think we can see some further strength in the dollar, and this is also going to be part of a Euro week story as well. The Euro's got some weaker data just coming out, and it's casting doubt on the overall strength of the Eurozone recovery. On top of this, you've got the whole Greek and the peripheral credit concerns of peripheral nations in the Eurozone weighing on the credibility of the Euro. So I think there's a potential for a further breakdown in the Euro.
So, Brian, when it comes to the Euro, it's not just fear or nervousness. I mean, there are some real fundamental concerns here. You bring up Greece and some other things, that German investor confidence number coming in weaker than expected. I mean, there are fundamental worries here, if you will, backing the decline that we're seeing in the Euro.
That's exactly right. And looking ahead, as the countries are basically moving toward austerity programs and the withdrawal of fiscal stimulus and accommodation, the road ahead for the European recovery looks even bumpier. So there's even more concern going forward. On top of that, we're looking at also rising unemployment rates in most Eurozone countries. So the headwinds are quite strong. All
right. So where does the Euro go? We've got it, what, at $1.43 today. Where do you see it trending?
Sure. The whole 141.5 to about 142.5 area is a significant support zone. Once we get below there, and I think we will within the next couple of weeks, then we're looking at a move down into about the 135 to 137 area initially. Recall back in December, the euro had a pretty strong fall. It declined almost 5%. And there's never been a 5% decline in the euro that wasn't followed by about a 15% decline in the following several months.
Hey, I want to also ask you, Brian, about interest rate expectations. I mean, how much of that is really driving what's going on in the currency market right now?
Not a whole lot. Interest rate expectations are very low for any kind of changes. What is driving it is basically the growth outlook. And about the only thing positive for the euro could be if stocks continue to rally. Then we're looking at the yen crosses and the carry trade coming back and staying firm. And
that's what I wanted to ask you about, the carry trade. I mean, so at this point, you think it's going to continue, or it depends?
I think it's going to continue. If you look at it, broadly, Carol, we're kind of not going anywhere very fast, and so volatility has come down pretty significantly. Interest rates are going to remain low, and that is the perfect environment for carry trade opportunities. All
right, so you're not seeing any signs, Brian, of kind of the market shifting away from what I would call those kind of risk appetite aversion as a driver of pricing. Not seeing any of that?
No, not except only in the very brief short term. You might get some of that on an intraday basis, but for the most part, the dynamic is still there. Investors are desperate for returns, and they're going to continue to chase risk as long as the environment permits.
All right, let me ask you, Brian, obviously, for the euro today, German investor confidence, that disappointment, that was a driver of that currency. What do you see as the biggest driver of currencies over the next 3 months here?
Well, I think it's going to be back to the growth picture and basically looking for stabilization in, for instance, U.S. Unemployment. And if we get that, then the road for a better risk trade is open. If we continue to see some on-again, off-again job losses, then we're looking at a further return to risk aversion. So it's going to be a very short-term, a real trader's environment.
All right, just got about 30 seconds left here, Brian. We've talked dollar, we've talked yen, we've talked the euro. Got a favorite currency here?
Well, my favorite is to sell the yen. I think we're still looking at the potential for a much higher dollar against the yen, a much weaker yen across the board. And this is based on any number of Japanese difficulties, not the least of which is that they're fighting deflation, and the MOF is trying to talk down the currency. So I think that's the long-term strategy to play.
Hey, one thing we didn't bring up, and I do have a few more seconds here, Brian, is China. I mean, what do we have to watch on that front? Just got about 20 seconds here.
Sure. We've got a lot of growth data coming out of China at the end of this week, and that is going to be a significant determinant for the overall risk trade. Keep in mind, they did just step on the brakes last week by raising the reserve requirement, and that's one of the reasons we've seen the risk in the commodity trade begin to falter. So we'll have to keep that growth data in mind.
All right, we certainly will. Hey, Brian, thanks for the tips. Brian Dolan with Gain Capital Group.